Thanks, everyone. I want to welcome you all to our non-QM series this month of July. We've been doing a weekly series where we go deep on some of our non-QM product here at Newrez. There's so many well-qualified clients out there that do not meet the requirements to qualify for a home through the agency or government programs. And so we've been going through our series and covering and doing deep dives on each of our product. This week, we're covering our Smart Edge product. We have one more week next week. So if you haven't registered for that as well, please reach out and register, talk to your AE. But this week we're going to be talking about our Smart Edge product, which is our Just Miss program. Again, a lot of partners have clients out there that don't qualify for the standard jumbo or agency, and these are well-qualified clients. So we want to educate you on why maybe some of these clients are missing and would qualify for this great program. Also, I want to reiterate this product is a no MI product for LTVs above 80%. So not only is it competitive in price, without the MI, you definitely want to make sure you're comparing these. So let me jump to the presenters that we have today. First up, Cecilia Estrada, who is our business development manager for all things non-QM. She's going to be walking through our presentation today. Myself, Don Chiesa, been in the industry for over 35 plus years, and I'm the VP of our wholesale and run a lot of our non-QM sales. We have Jevin Stafiri. He is VP of underwriting and all things non-QM. He is also, and I want to make sure I shout out that if you look at the bottom of your screen, there's a Q&A, and so please ask us questions throughout. Jevin is going to be glad to jump in and get you answers, and if we don't get anything answered during the webinar, we'll reply to everybody later. And then Lori Churz is our top AE nationwide, and she's on the call to help us share some stories about why our brokers are using and how they're marketing with some of our clients out there. So I'm going to turn it over to you, Cecilia. Thanks.
Thank you, Don. Good morning, everyone. Thank you so much for joining. Like Don mentioned, we are reviewing our products one by one every week, kind of giving you an overall a highlight of what that product really entails. So what we're doing today is going over our Smart Edge product. And a lot of people call this our Just Missed, right? Just Missed Jumbo, Just Missed on the property type, on the credit score, maybe on a lot of things that maybe don't fit your agency or traditional products. This would be the product that would cover that, right? Whether it's a loan amount that's an issue, maybe there's a debt ratio issue, something that's not quite fitting your traditional guidelines, this is going to be the one to do it. And one of the biggest features is condos, right? Because property types can also be something that are not going to make sense in a traditional loan product. So this is something that we're going to explore with our Smart Edge product today. So first and foremost, this is a full doc product. All right, it's full doc. So if you are having trouble with a traditional loan, with something that you're already working through, income, maybe a wage earner with pay stubs and W-2s, their taxes, this is the perfect pivot product where you can easily slide in and use the income that you already have, right? So you don't have to worry about moving to bank statements or using a P&L or maybe doing a DSCR type of product. This product is actually going to work with the income that you're used to using. It does handle all occupancies. So whether you want to do a primary home, a vacation home, a second home, or an investment property, you're going to be able to do it with this product. Now, there's a lot of information here for you to kind of look at and focus on, right? The number one thing is that, yes, it's traditional and it's full doc. We call this one Smart Edge. Like Don mentioned earlier, this is a no PMI product, right? So that is one of the advantages when it comes to pricing out a loan, especially at those higher LTVs. Your borrowers are going to have maybe a little bit of an advantage there with the overall payment without having that PMI. The other thing is that there's no AUS requirement on this. This is a manual underwrite. We're not looking at an AUS. So whether you got to refer with caution and ineligible, or maybe it was eligible, but there's something else that's holding back that loan, this product is going to help you to push it forward. And then, of course, the loan amounts. We can take on those jumbo sized loan amounts on here, right? You'll see there that we can do up to $3.5 million on a primary home, 2.5 million on your second homes and on your investments. So definitely a great product to take on those types of features, which are the number one features that usually will bring someone to this type of product where you have to pivot, right? The other one, and which is probably one of the one that a lot of people don't even think of when they're looking at a property, and you'll see that listed on the right-hand side, is a condo. If you are working through a condo, right, you know that you have to get that approved, you're getting an HOA questionnaire, things like that. This is where you have to really, really be, have kind of that ace up your sleeve and have something to look at just in case, right? Because that condo needs to be approved by Fannie guides. And if it doesn't, if something doesn't quite meet, that's going to be an ineligible condo. It's going to be non-warrantable, or maybe it turned out that the condo is a condotel, right? So that's also one of the bigger features on this product, is that we do allow for non-warrantable condos. And if we take a look at those condo comparisons, right, on the left-hand side here, you'll see some of the items that we look at for warrantable condos. These are the guidelines that Fannie Mae has set forth. And on the right-hand side, you will see what is considered non-warrantable, right? So all of those guidelines are a little bit more expanded. There's a lot of things that we look at: investor concentration, how many of the people that are living in this condo complex are actually the owners, or how many are tenants, right? Also, we look at single entity ownership. How many condos are owned by one person or one company, right? Are they kind of taking over the complex? So condos are a huge piece of non-QM. And we've got our account executive here, Lori Chers, one of our best account executives here. And I know she does a lot of condos. Every time we do reviews with her brokers, she's talking about the condo piece. So Lori, anything you'd like to mention about how we do our condo reviews, the process, how quick it goes?
Absolutely. So, Newrez, I think that we're just amazing on our condo process. I always encourage loan officers to, maybe you have a borrower with a condo, but maybe you're just trying to get in with a listing agent. Reach out to those listing agents, get those condos pre-approved. Let us help you steer your file through the process so much easier. So, how it works is we have a pre-flight process. So you can send in the full condo package. You can send in your just your insurance. Insurance is a huge deal right now with those deductibles. So send it into Newrez and let us pre-review your condo. We've saved so many deals. We get files in. The files just going, seamlessly down the river on a conventional loan product. And then all of a sudden, something comes up in that condo review. And if you started with Newrez, that just means that you can flip right over to our Smart Edge product, non-warrantable condo, easy as pie. And I get a lot of, can you help me save this file calls as well. And so then, you have to then transfer the file into Newrez, and we do take appraisal transfers on this product. But, if you've already started with Newrez, it's just so much easier. So our condo team is amazing, and they really look for reasons to approve the condo. I just can't say enough great things about them.
Exactly, Lori. And like you mentioned, it's very easy to get all your condo paperwork reviewed, right? You'll see there we have listed our condo team. We've got their email there, project review. So you can easily email them and say, hey, this is the address on the property that we're looking at. This is the HOA name. Do you already have it on your list? Or, is there any information there? Our condo team will review. We have a huge database of condos that we've reviewed in the past. We've got a huge list of approved ones that are maybe in the middle, we still need some paperwork, and some that have already been deemed ineligible, right? So the moment that you reach out to them, they're going to be able to tell you, yes, we can work with that condo. Or, hey, if you get me this one other piece, if you get me the insurance, then we can finalize that one. So it's a great resource for you. You can email them whenever you like, copy your AE on it. If it's just something really quick and pre-flight, you don't have to. You can just reach out to them. That condo team will get back to you fairly quickly. Okay, so that's a great resource for you. And again, condos are one of the biggest features here for our full doc Smart Edge product. That's one of the reasons why a lot of people come here.
Just a quick question for you and Lori, Cecilia, but
Don, we can't hear you.
Non-warrantable condo, I know back in my day, it was a great way to pick up new realtors. I know I've got a property that's challenging to lend on, and any realtor that's listing a property there is just a great opportunity for me to go out and create a new relationship with a realtor that's maybe listing another unit in the same complex that we just got approved. So I just think it's another great product, and not only to ensure you don't have fallout and save loans, but also pick up new realtors. So
Yes, absolutely. And then you'll see some of the other features that we've listed there, right? Another big thing, especially as of late, is the cash out, right? A lot of people need to get cash out on their homes. Maybe they're not able to do it through a traditional loan, right? Because they haven't owned the property for that long. With a traditional loan, usually you have to have that mortgage for at least 12 months, your first mortgage, in order for you to be able to get some cash back on your home. With us, with a non-QM loan, you just need to own that property for 6 months. So it's about half the waiting time that we've cut just to make it easier for our borrowers, right? When it comes to credit, also, you're going to see some credit differences in the overall expectation. So if your borrower has had some issues and maybe they had a bankruptcy, they had a foreclosure in the past, maybe there was something going on there, but they've since fixed it, rectified it, kind of revamped their credit, we're not dinging them on that for something that happened in the past, right? We're only looking at 2 years of seasoning since the date of that foreclosure, since the date of that bankruptcy. So that's also a spot where it's going to be lenient, right? Debt ratio is lenient. We can go to 50%, even go to 55 with an exception, if that's something that's necessary. Yes, we allow for gift funds. If your borrower doesn't have enough for the down payment, they don't have enough to cover their closing costs, their reserves, absolutely they can get a gift from a family member in order to continue that transaction and get it closed, right? And then another piece, which is probably one of our newest pieces, you'll see there number 9. If someone is self-employed and they haven't been self-employed the 2 years, right? So it's less than the 2 years, maybe a year and a half, then they are still eligible to qualify. Typically, self-employed borrowers need to be self-employed for at least 2 years. But we know a lot of people are becoming entrepreneurs more often. And so if they have not reached that 2-year time frame, it doesn't mean that they're not going to be eligible, right? So we do have our underwriter VP, Jevin, here. So I'll let him expand on that a little bit, because a lot of people do have questions about the self-employment section and not having that 2 years of seasoning.
Yeah, I mean, what we're looking for really there is somebody that was in the industry a long time, went out on their own to be self-employed, but they don't have that full 2 years. And looking at that, we can really find the right type of borrower we're looking for in this product. And really, if you can't fit in the jumbo space, a lot of the jumbos are still requiring those 2 years self-employed. That gives you a way in here. Previously, we would do these as exception. This is one of our top exception items. So that's great that we expanded our guidelines here recently to get it in the guides. And that's kind of how we work here. And that's one of the things that is really strong at Newrez is we look at the exceptions we're doing on a monthly basis. If there's something that's a tall bar, we can look at it and say, hey, maybe this is somewhere we want to expand in our guidelines. And this is a perfect example there.
Yes, thank you, Jevin. And yes, exactly that. Because this is a non-QM product, it's manually underwritten. We are the investor as well as the servicer on these loans. We're able to look at where we can start enhancing our product, making it work a little bit easier for our borrowers. So that is something that Jevin takes a close look at to see where can we actually maneuver and maybe make expansions on, help our borrowers qualify a little bit easier, a little bit faster, and open up those pathways to home ownership. Okay, so this is really one of the big features of our non-QM products, is that they're constantly evolving and changing and enhancing, just making it better for us, right? So let's go back to our jumbo, right? Because that's one of the pieces that a lot of people look at. So I want everyone to take a look at our loan sizes, right? This is a just missed jumbo product. So those low loan sizes are going to play a big role in whether or not you select this product. Pricing is very sharp here as well. A lot of people are selecting this product many times, even though their borrowers do qualify for a jumbo loan, for a traditional conventional loan. Pricing is looking really good here. There's no PMI. So they're selecting these, right? Especially like I mentioned earlier, if you've got borrowers in those higher LTV spaces, if you've got someone that's doing a primary home, maybe they're purchasing their first home, they're a first time home buyer, they've got 10%. They don't need the PMI on that loan, right? They can save a lot of money there on that monthly payment. And even with that 90% LTV, just that 10% down, you can go to 1.5 million, right? So that's still in the jumbo space. If you're willing to put more money down, you can go to 3.5 million. And this is just on your primaries, on purchases, right? If you take a look on the right-hand side, cash out, you can go up to $2 million for that loan. On your second homes, your investments, you're going to be able to go higher than that on your purchases, 2.5 million on both. And look at those LTVs. LTVs on your investment properties, all you need is 15% down, 85% LTV, $1 million loan with a 720 score. And if you look at our scores, they've been enhanced as well. We've made it easier for more borrowers to qualify. So 640 is now our minimum score. It used to be 660. That's something that we improved, we enhanced, made it a little bit easier for more borrowers to qualify. So that loan amount, and I know, Lori, I think you covered Oregon, right? I'm not sure if you always have those $1 million loans, but they will come in here and there. How important was it to get those loan amounts increased?
Oh, it was fantastic, and we do have jumbo loans in Oregon. Shout out to the Oregon peeps! But one of the things that really stands out about our Smart Edge jumbo product is that it is a Newrez service product, and we allow recasting after closing. So, reach out to your account executive for the details on recasting your jumbo. But it's a huge feature that I sell. Maybe people have a departing residence that they'll have some money after to pay down the principal and recast, but definitely a huge feature of our Jumbo Smart Edge product.
Yes, I'm glad you mentioned that as well, because a lot of people do ask about that. If we allow for recast, yes, we do. A lot of people also ask, do these loans have prepayment penalties? So this particular loan does not have a prepayment penalty. So yes, you're able to refinance, you're able to recast, you can get into a different product later without the worry of a prepay. The only products that we have that have prepayment penalties are going to be our DSCR products, which we covered, I believe, last week. So that's really the only one. Our Smart Self product, which is our bank statement and P&L product, doesn't have a prepay. This one doesn't either. So it's only our DSCR products that have prepays. Jevin, are there any particular questions in the chat that you want to address, maybe that are repetitive or coming up a little bit more?
No, unfortunately, the Q&A has been pretty quiet here. The slide deck must be perfect, and we must be doing a great job.
Right. Okay. Well, what we want to make sure that everyone knows is that we've got a product to kind of be a catch for all of those loans that are falling out of agency, that are falling out of jumbo. This is the product to look at, our Smart Edge product. Again, it's full doc, so it's going to be the traditional income that you're used to working with. You or your processor don't really have to worry about, handling different types of documents. It's going to be your traditional stuff. And then you just have all of these expanded, enhanced guidelines that you're going to be able to work with, right? The non-warrantable condo piece, the manual underwrite, no AUS, the debt ratios that are going to help you expand, go a little bit further. We only look at a back end ratio. So that's another thing that helps a lot of people out, right? Sometimes I have people saying, oh, my front end ratios are not meeting, so I'm not able to get my loan done. Here, we only look at a back end ratio. So that makes it a little bit easier. Okay. And of course, like we mentioned,
for Jevin and Lori is keep talking about these large loan sizes, and I think it's excellent that we can serve these borrowers as well. But I think this is great for the agency missed product as well. Like, how much of your business do you see, Lori, that's agency versus jumbo on this product?
Oh, I would say the vast majority is agency. And a few things that if the attendees are taking notes, some of my most favorite features of this product are a non-owner fourplex up to 85%. So that's huge. That definitely is outside agency norm. Non-owners with gift funds. So if you have the full 20% down, don't forget that you can have all gift funds for down payment, closing costs, reserves on a non-owner. It's amazing. In addition to that, I know we don't have as much time to do a deep dive, but hopefully everybody will reach out to their account executive. Asset depletion, asset qualifier, it's huge on this product. So you're just missed Fannie Freddie because you can't asset deplete just a stock account. You can on this product and just add a little bit of income to your file and boom, you're approved. So I would say that the jumbo feature is amazing, but all those other little features just add up to just such a well-rounded product that I just get excited talking about it.
I'm with you, like the back end ratio, not having a front end. This is all like stuff
Yes,
that
it's
you won't
huge.
qualify on the agency side that you now have a home for. And then if you start comparing the payments because there's no MI on it, again, just another reason why I think this product is huge.
Yep, agreed.
And I'm glad that you mentioned asset depletion, because yes, it is something that we can use on this product to help our borrowers qualify a little bit better. And also you mentioned asset qualifier. That's actually the topic for next week. We are going to be going over our asset-based product, asset qualifier. Asset depletion is a feature, right, that we can use to bump our income a little bit more. You can use it on this product, Smart Edge. You can also use it on Smart Self. But we are going to go over our all asset-based product next week. So hopefully everyone tunes in for that as well.
So reach out to your
Very
AE, sign up for
exciting.
that webinar so you can learn more about that product as well.
Exactly.
Yes. And make sure, again, that you are really taking advantage of the resources of our condo team, our account executives. Any questions that you have within, that just miss space, the condos, all of these support teams really help you to move your deal along faster. Even if it's a TBD, even if you're not in contract yet, you're just kind of gathering the information. We can still review all of that for you, right? We can review your income preemptively. We can review that HOA preemptively. So make sure you're using all these resources. We are here to help you make sure that we can get those approvals before you submit the package, before you disclose, so we know what we're working with. That's really one of the great features about all the support teams here at Newrez as well.
In addition to that,
Go ahead, Lori.
I was going to give a shout out to our marketplace marketing website. So if you log into our Blueprint website, there's a link under resources and you have access to all of our non-branded flyers. So there is a section for non-QM in that webpage. And so we do have marketing available to you just to start marketing these today.
Yes, yes.
Again, just another pitch on the agency product, right? The agencies have gotten really strict on condos and insurance. And so the deductible up to 10% is huge. But again, don't turn down a loan on the agency side without reaching out to your AE and chatting with them about our non-wardable condo product and our Smart Edge.
Yes. And our team, they will tell you if there's a possibility of making an exception if something doesn't quite fit. That's something that we can do internally as well. I have seen condos that even didn't meet all those requirements that you see listed there on the right-hand side. And then our manager will step in and say, well, you know what? It's just barely above, it's smidgen. I'll go ahead and make the exception for it. So you never know. There's a possibility that sometimes some of the ones that even don't meet are still able to go through. Remember, exceptions are a big part of the non-QM game, just because, again, these loans are manually underwritten. If it makes sense, if it's a good deal, the property is in good condition, it's a great borrower, it's something that we're willing to say, okay, yeah, we hadn't considered this type of scenario, but we're willing to look at it and go forward with it. So definitely always include your account executive in those types of scenarios. All right, team. So anything else you'd like to mention, Don, Jevin, you want to bring up before we end?
I think you've covered it all, and we've tried to give you some tidbits on kind of where to look. But again, it is the ability to serve a lot of these highly qualified clients that are just missed. So Make sure you're taking a deep dive with your AE, trying to figure out the different products that we have available on the non-QM. Because while we're chatting about Smart Edge here, the last couple of weeks we've talked about our bank statements, our DSCR loans, and then next week again, please sign up because we have a special product out there with high net worth individuals called Asset Qualifier. So please keep coming back. Hopefully, you're finding all of these very helpful and allowing you to earn more business and reduce your fallout.
Yes. Thank you all so much for joining us today. Hopefully you learned a little bit more about our non-QM products. Again, we've been hosting a mini webinar every week in July. Next week is our final product, Asset Qualifier. Make sure you tune in and reach out to your account executive for those links. Thank you, everyone. We appreciate your time.
Thank you, Cecilia.
Thanks. Bye.
Thank you.